Rima, many thanks. And Ritu caught up with Infosys CEO Salil Parekh. Here's that exclusive conversation.
Thank you very much for speaking to us. First, on your revenue guidance, the reason for the revision, while you're talking about a slower growth, a difficult macro environment, and also what this would mean for the fourth quarter now that you revised the guidance up. Does that imply like a lower 0.5% kind of a growth, a muted fourth quarter?
So on the guidance, we've had a very strong large deals win for Q3, and we've had very strong growth in the quarter, 13.7%. Keeping those factors in mind, and also looking at the points where some of our industries we are seeing a different economic environment. For example, in financial services, in mortgages or investment banking, in telco, in high-tech, retail, so on. Keeping all of those factors in mind, we've increased the guidance. Specifically on Q4, we don't provide a quarterly view of that. We only have an annual guidance.
That's right, but the implication is because you revised up the guidance for the rest of the year, will we see a bit of a muted growth? And also, if you could comment on, the EBIT margin, you expect to be at the lower end of what you guided?
On the Q4, so first, with the change in the guidance, typically Q3 and Q4 are seasonally weak quarters for Infosys in any case. So those factors still continue. On the margin, we had a very good operating margin in Q3 at 21.5. We've kept the guidance, which was narrowed to 21 to 22. We've kept it at that level, and we've also I made the statement in the comments earlier. It'll be at the lower end of the guidance.
While you do not give any guidance for the following year, FY24, what is the feedback you're getting from clients amid, the macro trends that we're seeing? There were large deal wins. You won 32 large deals in the quarter. Will that kind of a deal win rate continue?
So our pipeline for large deals is strong today. We have two engines of growth, really. One is on digital and cloud, and one is on automation and cost efficiency. So depending on how the environment changes, and it's different industry by industry, we feel that we are well positioned to sort of help our clients in both dimensions. So we continue to see that as the approach ahead.
And you've already flagged off certain sectors where you expect some sort of weakness: high-tech, telecom, retail, and now also BFSI. How long do you expect that to continue, and when do you expect things to improve?
So we've not put a time frame on that. We've more talked about what we've seen in Q3. And as things evolve in either direction, we'll start to talk about it.
How do we read your hiring figures? You'd guided for 50,000 fresh hirings for the year. You're at close to 46 now. But it has come down quarter on quarter. Are you expecting a slower growth? Should we read it as that?
So there again, we don't have any view that we share on the growth for FY24. Our focus really is on the guidance and the growth for this year, which will end in March.
All right. And attrition is now at a 5-quarter low. Do you expect that trend to sustain, or has that been a one-off?
Attrition, as you point out, is going down every quarter for us. There were several policies that we put in place, several changes, much more aligned with the employee expectations, their career development, their training. And many of those things, I believe, are helping us with a very sharp 6-point reduction in attrition this quarter, but also in the previous quarters.
And a final word on margins as well. Despite this kind of rupee depreciation, margins have remained flat. Any outlook you could give us for the coming quarters?
On the margin, I think we have the guidance for this financial year. But beyond that, we don't have a guidance for the next financial year on the margin.
All right. Thank you very much.